Welcome to Supernatural Stocks on Moneyweb with your host, the Finance Ghost. This is your weekly fix of equity analysis designed for stock pickers. Whether local or international, you can expect a mix of news and my ideas about what I'm seeing in the markets. As I record this, I'm looking out my window and the sun is shining in Cape Town, and that is pretty big news because I've got to tell you it has been cold and wet and awful for weeks now. Although I am old enough to remember when there was basically no water down here and it was like camping in your own home with limited water supply and these weird little portable geysers to warm up the water and all other kinds of irritations. Like in life, we tend to do better in the markets by remembering how things used to be. It makes us grateful for when things have changed, but it also makes us a little bit cautious about the change because we have experienced the hard times, not just the good ones. With the season about to switch over now to spring, and certainly not a moment too soon, there is more than just better weather in the air in South Africa. Whether I look at company announcements or I talk to entrepreneurs at ground level, there is a general belief that things are getting better. Sentiment is a powerful thing and practically a self-fulfilling prophecy. When we feel better about a place, we invest in it. As that investment flows, the place grows, and it looks like everyone who was bullish was right. Hence, they invest more, and so it goes. Momentum is a wonderfully powerful thing, in the same way that small streams can turn into raging rivers after the rain. For some of us in Cape Town, the raging river has unfortunately been thanks to the leaks in our roofs, but that's a different problem. Jokes aside, there are stocks that are blossoming on the local market, so the spring reference is very valid here. For traders who chase momentum, this is a fantastic opportunity to generate great returns right here at home by buying stocks that are not on anyone's list of all-time greats. Take Telkom, for example, which admittedly is flat for the year. But if you had watched it closely, you would have noticed that it was left behind by the GN euphoria, and for no real reason. The market finally caught on to this fact, perhaps getting bored of buying basically everything else. And Telkom's share price is now up 22% in the past month, so certainly better late than never. These sort of dislocations are what keep traders nice and busy. Speaking of dislocations, another absolute goodie was Buhl, which dished up an opportunity for me recently where I could hardly believe what I was seeing. Despite a lot of good reasons why it should have been heading higher, the stock instead tanked from nearly 170 Rand per share to 142 Rand per share. It looked to me like major selling into an illiquid market, and I used that as the opportunity to pounce. It has since recovered all the way back up to 166 Rand per share, and frankly, part of me wants to frame that chart on my wall to remind myself that the market really can be run and can dish up lovely opportunities like these. Although I was very surprised by just how quickly that share price recovered. Go and draw it and you'll see it's literally a V shape. But for investors looking for longer term exposure, the risk, unfortunately, is to end up waiting too long to enter the market and then buying at a valuation that is actually too high, with most of the best returns already made by those traders who don't waste time to chase momentum. The time to buy is not when the euphoria is truly everywhere, because that can very easily create bubbles and unsustainable valuations. There are many companies on the JSE that are enjoying all of the fruits of the current upswing, but some of them have also seen their multiples move to levels where I am not terribly comfortable anymore. In a perfect world, you want to see single-digit price earnings multiples and double-digit growth rates. Now, understandably, those opportunities are rare, and they are becoming even more rare in the local market because actually, there were quite a few of these types of things not that long ago. Spur, for example, is now on a price earnings multiple of 12.6, which is not exactly a 2-for-1 burger special. CA Sales Holdings is an even better company, in my opinion, than Spur, and is trading at 12.1x, so certainly not overly expensive, but not dirt cheap either. Over at Advotech and Stadio, the education duo who recently released excellent numbers, the PE multiples are 17.5x and 24.6x respectively, with the latter clearly seen as a market darling where nothing can go wrong, and Advotech also trading on a pretty demanding valuation. Speaking of darlings though, you'll need to pay 27.6 times earnings to get your hands on Shoprite, our local retail miracle. Quality stocks in South Africa tend to trade at high multiples, and they always have, because people were too scared to go and buy the stuff that was anything other than brilliant. These are big multiples, and that means big promises. Big promises can lead to big disappointments. So when you are looking for stocks that either can still blossom or are in the process of blossoming, it does make sense to go and dig around a bit and see what's left in the single-digit PE club. Is there actually anything there, or are we firmly in the teens now? One that I'll highlight is Nedbank. Although I do have my concerns around the interest rate cycle and how a drop in interest rates would negatively affect the net interest margin, the good thing about Nedbank is that it is a purer play on South Africa than the likes of Standard Bank with all its exposure to Africa and China. Nedbank is a simpler business, which historically has actually been problematic. It also has a large commercial property division, which also was not ideal in the local market for a long time. But now, these elements perhaps make it the pick of the litter, especially on a PE multiple of 9. Yes, 9 times. You will pay 3 times more per unit of earnings at Shoprite than you will pay at Nedbank. Goodness knows Shoprite is a vastly superior business in its market than Nedbank, but you get the idea here. Over the past year, Nedbank is up 41% and Shoprite is up 24%. Now, there is nothing wrong whatsoever with that Shoprite return, and it is clearly excellent by any measure, just showing how strong the group is that it can deliver outsized share price returns versus the market, despite the valuation. But at last, as Nedbank shows us, value investors are enjoying their time in the sun in South Africa. And if this improved weather continues in Cape Town, I mean that quite literally. Let's all celebrate spring and find those blossoming stocks. There's no such thing as an opportunity without risk, and these are merely my opinions on the stocks covered herein. Make sure that you do your own research, form your own views on the market when doing anything in your portfolio. Nothing in supernatural stocks should be taken as advice.